Sameet also joins in of Angel Broking. Sameet, good morning. Tell us, what is it that you have on your list?
Good morning to both of you, all three buys. First one would be on Seat. We have seen a vertical fall in the stock from the levels of 1150, 1160 in last 3 weeks. However, the stock has now reached its strong support zone, which is placed around 890, 880. Yesterday we saw a formation of doji pattern around this support, and this pattern has now been confirmed on an intraday basis. Looking at the hourly chart structure, we expect this pattern to get confirmed on a closing basis as well, and the stock is on the verge of giving a confirmation of parabolic SR, which would turn in a buy mode. Thus we have a buy call for a target of 992, stop loss 891. Other buy call would be on Hindalco. We have been maintaining our positive bias on this stock since last 3-4 days. The stock has already given a decent bounce from its recent lows. We expect this momentum to continue. 98 would be our target. It can be now bought by keeping a strict stop loss at 88. Our final buy would be on Federal Bank for a target of 58. The stock has given a clear price volume breakout from its multiple resistance zone of 50 on a closing basis. Today we are seeing a good traction in this counter. Going forward, we expect this momentum to continue if we look at the daily as well as weekly chart. The next resistance is around 58, so that would be our target, and fix a stop loss at 50 half.
There you have it. That's a view coming in from Sameet, betting in on Seat, Hindalco, Federal Bank. Meantime, let's talk about what's going on in the commodity space as well. And crude oil prices have fallen after running into resistance at that level of $50 per barrel. Remember, investors worried that high prices could perhaps reactivate the shuttered crude output, and that would additionally add to the global oversupply. Prices also pressured by the stronger dollar, with the dollar index rising against a basket of some of the other major currencies, but at the brink of 50, just sub that level at $49 a barrel. Gold, meantime, dipped to its lowest level in almost 8 weeks as it's headed for its biggest weekly decline in 9 weeks as we speak at $1,220 an ounce. Harish Galipilli, head commodities and currency JRG, joins in on the show. Harish, welcome to Traders 20. What's the strategy on gold after it's dipped to these levels?
I think both gold and silver are extending their downward momentum. Largely, if you look at gold, its inability to sustain at higher levels, and also the strength in dollar is weighing on the prices. This trend is likely to be extended further, maybe towards $1,200 in short term, then 1180 as well. On that backdrop, we recommend to sell gold around 28,780, 800 kind of levels for a target of 28,400, and stops can be maintained about 29,000 levels.
Okay, Harish, also share your strategy on crude.
In energy complex, we see some kind of a correction emerging in crude prices. So one can go short at least for next 1 or 2 sessions, maybe around 33.40, 33.50 kind of levels, keeping a stop loss above 3,400, and downside targets could be anywhere around 32.50 to 32.60.
Okay, that's the cue coming in on the commodity space. And on that note, gentlemen, lovely having you with us on the show. We'll take a quick break right here. Come right back. In just a bit, we'll get our guests lined up for the stock game.